good day for the market. In fact, up almost about 0.5%, more than that, and so far no great signs of volatility.
That's true, Sonia. And if you just look at it, few of the stocks are helping us to move higher. So something like a TCS should come up for you. That stock, in fact, has moved to the high point of the day. It's helping the Nifty to move higher. And a couple of banking stocks as well that were quite subdued in trade. They have risen up to the occasion. So Bank of Baroda as well as Axis Bank, both of them have pulled back from the day's low. Kotak Mahindra Bank as well is participating in the rally. But on the flip side, Sonia, you're tracking that stock very closely. Hero MotoCorp has moved to day's low, and even we're seeing some selling on the likes of ONGC as well as DLF. Both those two stocks, in fact, are under pressure. But Hero MotoCorp clearly under pressure.
Yes, in fact, if there's any negative news, then the stocks are getting trashed. But otherwise, there's quite a bit of buying that you're seeing in blue chip heavyweights, the likes of HDFC, TCS, ICICI Bank. So this is clearly a market that people are confident on and are looking to buy on every dips. But we're going to talk about all these stocks and more in the next half an hour. Joining us today on the show, we have Mayuresh Joshi of Angel Broking to answer all your stock-specific queries. And Hemant Rustagi of Wiseinvest Advisors is our personal finance guest. So let's straight away go across to our first guest, or rather our first viewer. Radhi writes in to us from Mumbai. She bought 50 shares of Hero MotoCorp 1 year ago at 1965. So she's sitting on a huge gain at this point. But after looking at today's move, she wants to know if she should continue holding or is it the right time to sell. In case you're wondering why Hero MotoCorp is under quite a bit of pressure, today the promoters of the company sold about 3.5% of their stake in the company, and this is the first time promoters have sold their stake. Earlier, remember, a lot of the private equity players in Hero MotoCorp like GIC, Bain, etc. went ahead and sold stake. But today, for the first time, promoters shared their stake. Now, the management clarified that they've done this in order to fund new businesses. They haven't mentioned what these new businesses are, but there were reports doing the rounds that Hero Moto is interested in the defense sector. They're interested in the assets of names like P-Power of Defense, etc. None of that has been confirmed, but this is the view, or rather the reports that are doing the rounds. The interesting part is that the stake sale has been done at a discount to the current market price on Monday. So the question is, why did the promoters need to sell at a discount, and what are these new businesses that they're looking at? But nevertheless, our viewer is sitting on a big gain. So let's find out. Mayuresh, welcome to the show. What's your view on, on the promoters selling stake today, and what would you advise this investor to do?
Afternoon, Sonia. I think clearly one must wait and watch and understand why the promoters have actually done that, as you were mentioning, whether it was for funding new exercises, new businesses, and whether those deals are going to be value accretive on a consolidated basis for the company. One will understand once understand the contours of why this and in what purpose this money is going to get used. However, coming to the core fundamentals, our opinion is that the stock can do pretty well, in fact, over the next 18 to 24 months. So our own expectations in terms of volume growth are close to 14-15% for Hero MotoCorp, and whatever we've done in terms of the initiative in terms of cost optimization, Project Leap, I think that should have substantial impact in terms of cost savings. So our take is probably, I think the top line should improve 18-19% from the current level on the compounded basis of the next couple of years. The bottom line should improve 21% over the next couple of years, and clearly with royalty going off, I think they should have one-time gain going forward from FY15 of 400 crores odd. So our target price probably remains intact at 3242 based on 17 times FY17 earnings. So our opinion would be for long-term investors to probably stick onto the stocks, but have a 12 to 15 month time horizon.
All right, and that's the view coming in on Hero MotoCorp. But let's pull up the Bank Nifty. That one seems to have been on fire in the last few minutes. So just pull up the Bank Nifty. You'll see that that one, in fact, has really moved higher. Look at it. It's holding with a gain of around 170 points odd. The volume picture as well should come up for you. The NSE cash volumes, as we speak, it's in excess of around 16,000 crores. Remember, Hero MotoCorp bulk deal as well will be part of that one. It's close to around 1,900 crores. But the banking stocks, IndusInd Bank, Axis Bank, as well as SBI, all of them have made a bit of a move in the last few minutes. And pull up some of those mid-cap stocks as well. Shree Cement should come up for you. That stock, in fact, has moved quite well. It moved high, and in fact, then it saw some profit booking as well. So that stock should come up for you. And that's the stock. In fact, it moved high by 1% odd. It's seen some profit book in the last few minutes. India Cements as well should come up for you. That stock as well did a bit of a jig in the last few minutes. So that stock as well should come up, spiking up as we speak. But let's go to our next caller. Arpita called us from Odisha. She has investments in PC Jewelers. Hi, Arpita.
हाँ, hello, good afternoon, sir.
Good afternoon, madam. आपका सवाल क्या है?
एक्चुअली मेरे पास है ना 400 शेयर है टीसी ज्वेलर्स के, तो जो मेरा टाइम है वो 3 मंथ से लेकर 6 मंथ तक है, तो उसको सही है या फिर सेल कर दिया जाए?
All right, Mayuresh, she's an investor. She's a lucky girl actually because she's bought 400 shares. I think the buy price, if I'm not mistaken, is $42, so she's making big money over there. Good she didn't buy gold. But Mayuresh, what do you think? She's got nearly around a 6 months time horizon. Should she hang in there?
Afternoon, Nigel. Clearly, as a disclaimer, I think we do not cover the stock, so very difficult to give comment in terms of either buying or selling. But as we see the dynamics, probably a lot of participants are hoping that any rollback that probably happens in terms of the import duty norms would benefit jewelry companies in a substantial manner, because that reduces the working capital constraints in a substantial way. So I think the working capital debt in terms of short-term borrowings that these companies had to undergo would see significant amount of reduction going forward. However, our take is that if investors are looking at a 6 to a year time horizon, probably I think financials would be one place to probably stick with. So I think housing finance companies is something that I'll suggest to the investors as an alternative investment. So something like an LIC Housing Finance, which has posted a decent set of numbers, and where we believe that the volume growth can be substantial going forward. I think the top line, bottom line should grow at an exponential pace, and with rate cuts probably happening over the next few quarters to the extent of 50 to 75 bips in our opinion, should have a significant amount of bearing in terms of the structural wholesale borrowing costs. So in terms of valuation at around 2.4 times price to book, we believe that the story is intact for LIC Housing. So LIC Housing is one story that the investor can also look at from a 6 month to a year's time horizon.
All right, so that's some big gains that she's sitting on as far as TC Jewelers is concerned. But let's move on now. Anushka Singh writes into us from Pune. She's a young professional and her annual income is above 4.5 lakh rupees per annum, and she wants to know which asset class should she invest into to maximize her returns. Hemant Rustagi joins in. Hemant, no prizes for guessing this one. I'm sure it's equities, but what would your own opinion be?
Well, Sonia, before deciding which asset class to invest in, I think there are a couple of factors that each investor should look at. One is, the time horizon, of course, is very, very important, and also the frequency at which one can invest. In this case, because she's talking about, earning good return, and I'm assuming that, she can invest for a longer period. So if the time horizon is at least 5 years or more, my recommendation would be that, she can look at a combination of balanced fund and equity fund and invest through SIP, because what SIP does is that you invest in at different level every month at a pre-decided interval, so you benefit from averaging. A couple of funds she can consider investing as. One is in the balanced fund category, she can look at HDFC Prudence, and on the well-diversified equity fund, she can look at Birla Sun Life Equity Fund, which is predominantly a large cap fund, and she can look at Kota Select Focus, which is a combination of large and mid cap. The key factor is, like I said, if you invest systematically, then you don't really have to worry about the current market situation, because that is obviously not the right way to start your investment process.
All right, then, that's some advice coming in. I hope you're listening in. But if you want to catch any of the advice we just gave all our callers, you can simply log on to youtube.com/CNBC TV18. Let's slip in a short break. When you come back, we'll continue answering your stock queries as well as your personal finance queries. Stay tuned.
Aditya Birla Group presents Budget 2015, the Make in India Budget.
Welcome back to your stocks on CNBC TV18. The Nifty again has made that move. It's moved to the high point of the day, and a few stocks should come up for you. But let's pull up a few losers actually. Sesa Sterlite, maybe they're bidding a tad bit too aggressively for some of those blocks, so that stock should come up for you. It's sitting with a Carter closure around 3% odd. Remember, there is one of those Gary Palma coal blocks that are currently being bidded for. So I believe that in fact the price is at around 2,100. It started off at around 2,050. So watch out for that stock as well. Remember, yesterday itself, Balco secured that block for around 3,025. But otherwise, the Nifty is looking good. IndusInd Bank should come up for you yet again. And Infosys, the stock that was a tad bit subdued, now that stock in fact has moved towards the 2,300 odd mark. Infosys is the stock that we're talking about, and that's what's aided the Nifty to move back up towards the high point of the day. A few other stocks in the mid-cap space, something like a Voltas is buzzing around. Syndicate Bank as well should come up for you, so that stock as well is doing quite well. And Allahabad Bank as well, that stock as well has started moving higher. We were telling you about India Cements as well as Shree Cements. Pull up Ramco Cements, you'll see that stock as well did a bit of a move in the last few minutes, and that one as well moved to the high point of the day. But let's get back to answering your stock query. So Bhavin calls us from Kolkata, and he has some investments in JP Associates. Hi, Bhavin.
Yeah, hi. Good afternoon.
Good afternoon. How can we help you?
See, the thing is that I have put a query. I have bought 500 shares of JP Associates a few months back, right?
Right.
But somehow the prices have crashed over a period of time.
That's true.
And over the period I've come to know all the news which are, you can say, all negative news regarding this particular stock. So I'm at loss to understand what to do with this particular share. Should I hold on? Should I average it out? Or should I make loss and should I book loss and move out of this particular share?
Okay, Bhavin, we'll try to answer your query. We have our expert with us, Mayuresh. But another point, Bhavin, you have been holding it for the last 3 months. Can you hold it for the longer term, for another 5 months, another 1 year? Are you okay with that?
At least cost price or not at some point of time. Forget about profit, but regarding my principal, I'm worried.
Okay, Mayuresh, actually, he's sitting on a massive loss. So the stock is down close to around 70%, I think, from his buy price. What should he do? Should he hang in there? Where exactly should he cut his losses if he should be booking out some losses? And the other option he was asking is, should he average? Now, that's going to be quite dangerous, but should he?
Clearly, Nigel, I think as a house view, I think we are quite neutral on the stock, and the reasons are quite obvious. I think regulatory concerns is what has brought the stock down. And again, I think the operation performance has been weak. Even if you look at the quarter gone by, I think all the 3 business segments have probably done very disappointing set of numbers. I think if you look at the cement business, the takeoff was around 3.3 million odd tons. I think the realizations were down in a big manner. The EBITDA per ton, if I'm not mistaken, was close to 476 rupees, which was down to 25 rupees on a quarter-on-quarter basis. If you look at the EBIT margins probably for the real estate division, I think that has come around 8%. Even for the EPC division and the power division of JP on a consolidated basis, I think those divisions have probably not done well. So I think the entire story probably is deleveraging and probably getting off its assets to probably reduce the debt. But I think the deleveraging is going to take a huge period of time, and I think that's going to be a huge painful process for the company. So I think the cash flow improvement is simply what we do not foresee in the near future for JP Associates. As an alternative, probably since we are having a neutral view onto the stock, I think L&T can be considered as an alternate investment by the investor. Clearly, I think the stock has disappointed when it comes to its hydrocarbon division. And again, I think the kind of margins on this infrastructure segment has disappointed a lot of analysts. But going forward, probably it remains one of the best stories for the India macro improvement. So I think clearly once the capex cycle revives, L&T is best placed. And again, I think the kind of different businesses that it's got, it is into defense, it is into infrastructure, and that probably encompasses a lot of the India story going forward. So I think probably L&T would be a much safer and a better bet for the investor going forward with the 12-month horizon.
All right, from one loss to another stock that has been, destroying wealth for a long time. JP Power is in focus now. Sushil Kumar calls in from Ghaziabad. He has some investments in JP Power, so let's find out. He as well is sitting on a big loss, as you can see. Mr. Kumar, good afternoon. What's your question?
Good afternoon, ma'am. Now I am Sushil Kumar calling from Ghaziabad.
Sure.
Madam, I have 5,000 JP Power and my average price is 18, and I am holding this stock since 1 year. So I want to know either I exit or average it.
Okay. So he is willing to either exit the share at this point at a loss or average it at lower levels. Mayuresh, what do you recommend for this investor? Because as we've been discussing, I mean, this stock has been a wealth destructor for very long. Do you think it's just best to sort of exit the stock and move on?
Again, clearly, Sonia, as a disclaimer, we did not cover it in our research coverage, but the way the operational performance of the company has been, and clearly I think that reflects the overall consolidation performance of the JP Group. I think it has just not been up to the mark. Clearly, I think the hydro assets for the company have been reeling under pressure, and the load factors have not been inching up, and the rates probably have not been lucrative for the company across its power plants, whether it be hydro or the few thermal assets that it probably owns. So I think operationally, I think the performance has been weak, and as I've been mentioning earlier as well, I think we do not see operational improvement or efficiencies probably to start creeping in or creeping up for the entire group. So I think the cash flows would still be a question mark. So I think if he's not a long-term investor, yes, I think on rallies probably he could probably get out of the stock. Look at better quality stocks with good corporate governance, good management. So L&T, a few of the leading private sector banks like an Axis Bank, a Yes Bank probably are better alternatives for the investor.
All right, then given a couple of alternatives as well instead of getting into these JP Group stocks. But the Nifty is holding with good gains, and the mid-cap index as well is moving quite well. So we're getting some statements with regard to defense sector. Take a look at BL. That stock, in fact, has gone to around that 4,040 mark. Pull that stock up for you. You'll see Bajaj Finserv as well. Bajaj Finance, in fact, should come up for you. That stock as well has moved to the high point of the day. Pull out Bajaj Finance, and you'll see that Voltas as well has made a bit of a move in the last few minutes. So good going for a few of these stocks. But on the flip side, we're seeing stocks like CEAT has come in for some profit booking. That one's down close to around 1% odd. Wockhardt as well is seeing some profit booking as we speak. That stock as well moving to the low point of the day, sitting with a cut of around 1.5%. But we get back to answering your queries. So we have Sujit who calls us, who writes to us from Mumbai. He has a personal finance query. He wants to know if it's the right time to invest into gold, and he's 23 years old and he is a professional. Hemant, what do you think? Gold prices, they seem to have bottomed out after the sharp correction, or do you think it's headed lower?
Well, I would say, from the asset allocation point of view, I think there is a place for different asset classes like equity, gold, and debt in the portfolio. I think the key factor is how much exposure you should be having in these asset classes. So there are a couple of important factors one should look at before deciding whether to invest in an asset class or not. One is obviously the time horizon, what is the investment goal, and what is the existing exposure to an asset class. Broadly speaking, as far as the goal is concerned, my belief is that one should not have more than 5 to 10% exposure. He looks like a new investor, young investor. My belief is that even if you want to include gold from asset allocation point of view, it should be done once you build a portfolio of equity and debt. So, purely from asset allocation point of view, I would say that not to invest in gold right now. But if the goal is to accumulate gold for a wedding in the family or any such objective, then obviously one can start investing. And my recommendation then would be that invest in paper gold like gold ETF or gold saving fund, depending on whether he has a demat account or not. And even there, recommendation would be to invest systematically through SIP, especially if he's investing in gold saving fund, because the gold prices tend to be volatile from time to time. So exposure, whether he should have or not, depends on a couple of factors, as I mentioned. But if he's a new investor, he's looking to build his portfolio, he should avoid at the moment.
All right, avoid gold at the moment because there's so much happening in equities. Look at the markets today at the high point now, more than 200 points higher for the Sensex. And by the way, the European market opening has given a further boost to our own markets. So as we speak, the French index is up almost about 0.8%, and a couple of other markets like Greece, etc., are also trading well in the green. So that will just come up for you on your screen. We'll take a break, but when we come back, we will focus on some more stocks and answer your personal finance questions.